4.7 million Americans cannot pay their mortgages right now. That's 1.5 million more than 2008, and in this video, we're going to be talking about what that means for our mortgage and real estate market. What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. Forbearance should be the word of the year of 2020. It is when you cannot make your mortgage payments anymore, so you go over to your bank and you ask them to pause your mortgage payments for a little while. Well, in the beginning of March, before this whole pandemic started, 0.25% of all mortgages were in forbearance. By the beginning of April, 3.74% of all mortgages were in forbearance. Then by mid-May, 8.8% of all mortgages in America were in forbearance. To put this in perspective, 8.8% of mortgages in forbearance means that 4.7 million Americans don't have the money to pay their mortgages right now. You can compare that to 2008, where 3.1 million Americans didn't have the money to pay their mortgages and they received a foreclosure letter. And then out of that, 861,000 Americans were foreclosed on in 2008. The obvious difference between 2020 and 2008 is the word of the year: forbearance. There's a forbearance program now in 2020 which doesn't automatically put people in default. But you have to kind of wonder how this forbearance program is going to play out, because right now we would have been on pace to see more foreclosures in 2020 than we saw in 2008. That's why in this video, I want to talk about this mortgage crisis, what's happening, how it affects you, and what you can do to find the opportunity in this crisis. But before we get into that, hit that thumbs up button below, because if you don't, then YouTube doesn't share our video with anybody else. Subscribe to the Minority Mindset YouTube channel, that way you don't miss our new financial education videos every single weekend. Hit that little notification bell too, because if you don't, then YouTube won't let you know when our new videos are released. As we're hovering around 40 million Americans who lost their jobs, it's no surprise that people don't have money to make their mortgages. Just look at the numbers. In 2019, 65% of American adults were homeowners. And during that same time, in 2019, 69% of American adults didn't have $1,000 saved up to cover an emergency. That means in the very best case scenario, more than half of all American homeowners had less than $1,000 saved up to protect them from a job loss, a leaky roof, or a broken window. Hey, I told you not to play it next to my house! So when this whole pandemic started and the economy slowed down and millions of Americans lost their jobs, millions of Americans suddenly couldn't pay their mortgages. That's when the government came in and passed the CARES Act. Everybody knows the CARES Act as the program that sent out $1,200 stimulus checks to lots of Americans, but the CARES Act also said that if you have a government-backed mortgage and you are facing a financial hardship, you can pause your mortgage for up to a year. About 3 out of 4 mortgages in America are government-backed. So if your mortgage is backed or owned by Fannie Mae, Freddie Mac, the VA, USDA, or FHA, you qualify for this forbearance program. If you are one of those 1 in 4 people that don't have a government-backed mortgage, well, you don't qualify for this forbearance program. However, lots of banks understand the severity of this economic slowdown and everything going on, so they have created their own forbearance programs or their own loan modification programs to help homeowners. As of May 2020, 4.7 million Americans applied for forbearance. That's very significant considering back in 2008 when the whole real estate crash happened, 3.1 million Americans couldn't pay their mortgages. And now people are saying that by June, 1 in 8 homeowners will not be able to pay their mortgages and expect them to be in forbearance. Like I said before, obviously the difference between now and 2008 is this forbearance program, because now if you can't pay your mortgage, you have the option to forbear your mortgage. And this brings me to my next point. What's going to happen when all these forbearance programs end? And there are 3 things you want to understand. For one, you should understand that homeowners are allowed to sell their homes when they're in forbearance. If you're in forbearance, you're not required to make a monthly payment, but your interest is still adding up, and this might encourage some people to sell their homes. Right now in May 2020, home values are still relatively high. And at the same time, you have like this pent-up demand from buyers, because you had all these people looking to buy a home in early 2020, and then came these lockdowns and this pandemic, so people weren't able to buy a home. And now as these lockdowns are ending, people are now able to start to look to buy a home again. So there's a good chance that you'll see people who are in forbearance that are facing a financial hardship sell their home, especially if they have a lot of equity in their home to cash out. Second, you're probably going to see a lot of loan restructuring. If you have a private mortgage, you might not have the opportunity to forbear your mortgage for a year, and some banks might ask you to make up all of your missed payments very quickly. Government mortgages have said that they're not requiring a lump sum payment at the end of your forbearance, but private mortgages can. So you might see a lot of people restructuring their loans, but that might become a little bit more difficult because of what I'm talking about next. Third, when forbearances end, there's no guarantee that people will be able to pay. As of May of 2020, there are three kind of potential scenarios that I can see happening once these forbearance programs end. The best case scenario for the economy is people put their mortgage on hold for 6 months or a year, and during that time, the economy gets better, people get their jobs back, and sure, maybe they have a little bit higher payments, but now they can make up for it because the economy is running again. The second potential scenario is people put their mortgages on hold for a year, and then the economy doesn't recover in that time, and so this year ends and you still have millions of Americans without a job, and so this forbearance period ends and people still don't have money to make their mortgage payments, so more people are pushed into foreclosure. The third potential scenario is people put their mortgages on hold for a year, maybe the economy recovers a little bit, but people forget about their mortgage payment because they're not paying it for a year. And so maybe they get their job back and then they go out and they rack up their expenses because they forget about this mortgage payment. And then a year later, their mortgage payment comes back and they are slapped with this expense that they completely forgot about, and now they don't have the money to make their mortgage payments because they have all these other expenses. It's too early to tell what's going to happen, and I'm going to go over the things you need to be paying attention to. But if you do want to stay on top of what's happening in the top finance and business news like this, well, that's why we created our free finance and business newsletter, where our team first breaks down the top finance and business news, and then we show you how this news affects your wallet. That way you can be smart with your money. Our finance and business newsletter is completely free, and you can subscribe to our newsletter by clicking the link up here or by clicking the link in the description below. By the way, our financial news emails are different from our financial education emails. What I'm paying attention to right now, and what you should be also, is the demand to buy a home and the number of people selling their homes, because these two things are going to affect the value of real estate. Right now, home values are still very high because people think that once these lockdowns end, the economy is just going to go back to normal, and the Fed just keeps pumping up the markets with an unlimited amount of money. But it's not so simple with real estate unless the Fed and the government start buying real estate. Right now, we have a lot of home buyers looking to buy a home because they were looking to buy a home before these lockdowns started, but then they were put on hold. And so there is still a pretty good demand of buyers out there. But once all this pent-up demand goes away to buy a home, maybe by the end of the summer, that's when we're gonna see how strong a real estate market is. If the economy stays slow, then you're probably going to see less people wanting to buy a home, which would bring the demand or buyers to buy a home down. At the same time, we might see more people want to sell their homes because, like I said just a minute ago, if somebody is facing a financial hardship and they have equity in their home, they might use this as an opportunity to sell their home. That way they can get this cash to help kind of take care of themselves. If that happens, then you would see more sellers than buyers, and that means that sellers will now have to incentivize buyers to buy their home, which means you'll see more sellers start to cut the price of their properties to get somebody to buy their home, and this would push real estate values down. That would be very bad news because now it would be much harder for people to refinance on their homes, because if real estate values come down, then more people are going to be underwater on their homes, meaning they will owe more than what their home is worth. The government and the Fed already know how big of a concern and issue this is, which is why they're doing everything they can to kind of prop up the value of real estate by giving people stimulus checks and giving money to the markets. This way people don't have to sell their homes if they don't have to. And at the same time, the Fed has also cut interest rates to zero to incentivize people to buy a home. The Fed cuts interest rates when they want to encourage people to go out and borrow money, like to buy a home. And the last time we saw 0% interest rates was during the 2008 crash. The challenge is when people are worried about getting sick, or when people are worried about losing their job, they put their dreams of buying a home on hold. So the Fed is trying to fight that or combat this challenge by cutting interest rates and making it cheaper for you to buy a home. That's why mortgage rates are hitting record lows, which can be very good news, like if you already have an existing mortgage. If you have an existing mortgage, this is one of the best times in history to consider refinancing your mortgage because interest rates have never been this low before. Just make sure you don't refinance more than you need, because if you try to refinance every dollar you can and home values fall, now you would run into the issue of potentially being underwater on your home. So just prevent that from happening and be financially smart and only refinance what you need. If you are looking into refinance, make sure you shop around, because some banks and lenders are going to charge you a whole lot less than other banks. So just do your own research. I'm not going to do a whole pitch in this video, but we do have a sponsor, you know where they are, below, who can help you do that at no cost to you. And yeah, if you want to learn more about refinancing, I got the link below. There's one more thing I need you to pay attention to when it comes to the supply of homes for sale: landlord foreclosures. Remember how asset prices work. When you have more buyers than sellers, the price of an asset will go up. When you have more sellers than buyers, the price of an asset will come down. And landlord foreclosures could create more sellers. Right now, 1 in 3 Americans are not paying their rent. At the same time, you've probably heard the news that tenants cannot be evicted from their homes. But the kind of behind the scenes information that a lot of people don't hear is that this means that landlords are not getting paid, and many landlords don't have enough money now coming in to make their loan payments, and many landlords don't qualify for forbearance programs that homeowners get. What this tells me is landlords are going to be pushed into foreclosure or selling their homes or properties unless something changes. If that happens, that means more properties are going to be sold, which means we would have more sellers than buyers, and that would theoretically bring the prices of real estate down. This again would pose an issue, because now if there are more sellers out there, then more people would likely be underwater on their homes, meaning that they would owe more money than what their home is worth, and that would make it harder for people to refinance, which would hurt the overall real estate market. Again, it's very difficult to kind of predict exactly what's going to happen, because we have so many new government programs being created left and right, and we don't know how bad this recession is going to be yet. What this means for you is, if you are a homeowner, know how forbearance works, know how refinancing works, and know the risks that are there if your property value comes down. If you are a real estate investor, do whatever you can to build some cash reserves, because the next year is going to be rough with tenants not paying. If you are investing in REITs, real estate investment trusts, make sure the companies that you're investing in have cash on hand to withstand whatever is coming next. And for those of you looking to buy real estate, especially as an investment, keep an eye out on the things that I was talking about: the number of people looking to buy a home, the supply of homes, and landlord foreclosures. Again, if you're looking for an easy way to do that, I have the link to our free newsletter in the description below. Thank you for watching. If you enjoyed this video, share it with one friend, that way we can help spread the word. If you want to learn more about the factors that might be coming together to bring this real estate crash to light, I already made a video on it, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.